And the stock market is in the red. What's going on, team? It's Ricky here with TechBud Solutions. Hope that you guys are all having an amazing Sunday. Let's go ahead and talk about this red market. So we got the NASDAQ barely in the red right now. It's down 0.13%. We're right at that 12,000 resistance for the NASDAQ futures market. If you look at the 15-minute time frame, we can see that we've been really hovering around and kind of struggling to hold above 12,000. So again, a big goal for this week, right? If you're a bull and you're kind of asking the question of like, why are we getting rejected? Why is there a resistance range? I feel like once you do take a step back, right, hoping every candle represents 1 minute of time, we can see that 12,000 used to act as a support level and it's now acting as a resistance level, right? It doesn't matter if we break above for a short period of time. There are times that we did hit highs of 12,100 and then we got rejected. We hit highs of 12,100 once again, and then we got rejected. So the goal for this week is to ask ourselves and be realistic with us, right? If you want the market to go up, right, that there's nothing wrong with you wanting it to go up, but if it's actually not holding and making higher highs above 12,000, then you can't be surprised that the market's going to most likely pull on back, right? We can see this a little bit more clearly on the NASDAQ ETF. So this is QQQ. We can see that we're still trading, well above 290, but we're not really making higher highs. And if we look at the 4-hour, it's very easy to see, right? We hit highs of $334 before. We pulled on back, and look at this. Old support levels becoming new resistance levels, right? So it's good that we're trading around this area, but if we don't actually make higher highs here, then we're most likely going to pull back to the moving average, and if we break below that, then we're going to pull back to previous support range. There's nothing wrong with the market pulling back as long as you prepare, right? As an investor, as a trader, you can make money on either side of things, right? It doesn't matter if the market is bullish or bearish, you can make money on either side, right? This is why we always talk about just allowing direction to be in your favor. So, all right, let's go ahead and see what's going on. What's up? What's up? Good afternoon. How's everyone doing now? Good afternoon. Good night. How's everyone doing? So good week coming. I'm pumped. I'm pumped to see how this week ends up performing. I just wanted you guys to have a general understanding of what I'm looking for, right? If we actually make some higher highs above this like 295 resistance range, then I feel like that would be a step in the right direction to go bullish, right? If we get rejected once again and we break below the EMA, then we're most likely gonna, short the market and work our way back down to that moving average. So that's kind of what I'm waiting for. I'm waiting for direction to be more clear. If you're part of my LPP team, you know that that's all we've been trying to focus on is allowing direction to point, which way we're going to be trading. Not every day is a day worth trading, and the more you're able to hold yourself back, to hold yourself accountable, and to not force a trade if direction is not clear, yeah, you might miss out on a couple of trades, but guess what? You also didn't have a red day, right? And any open trade is a trade that's open to risk. And the quicker that you understand that, the better you will do long term, right? So it feels good to be a part of the team. What's going on, Spicy Candy Bar? What's up? What's up? When is the next CPI data report? So I actually filmed a video on Saturday making you guys all aware of this. Our next inflation report, which is known as the CPI data report, is going to be on December 13th at 8:30 a.m. And if you guys think that we should live stream that, make sure you drop a thumbs up and we'll make it happen. To the best team, LPP 2.9. What's going on, Jason? Think you missed the zero there. Good afternoon. Can you break down XPEV? Be more than happy to break it down for you guys. So again, if you guys want to participate in this live chat, all you literally have to do is subscribe to the channel, and then you can ask me any questions during this live chat. So I'd be more than happy to break your question down and or your stock down. All I literally ask you to do is feel free to drop a thumbs up and make sure that you subscribe. If even after this live stream, if you still have questions, send me a direct message via Discord, and that's that first link in the description of this video, or send me a message via Instagram, and that's that third link in the description down below. So can you show the view of the CPI data report in that website? What? Can you show how to view? Yeah, I mean, you just click on HTML, right? Or you can click on the PDF once it gets released. So it's very simple. So I actually have a video on how to read the CPI data report and how to get access to it. I have that video on YouTube, so you're more than welcome to check it out. Let's go ahead and get right to it into those breakdowns. So we talked about where I see or how I plan to prepare for this upcoming week, right? Direction is still not very clear. I don't know if we're going to get rejected at this resistance level or if we're going to break above. This is why instead of trying to predict the future, you can stay cash and then begin to prepare for it, right? That's the great thing about the overall market, is that you get to decide what to do if you can control yourself enough, right? And stay cash when you're uncertain, right? It's the people that hope for something to happen that most often get, experience that unwanted loss. So is tomorrow like a red day? As of right now, NASDAQ futures are down. They're not down a crazy amount, but just so you can see, right now markets are in the red, but it's just very little, right? And we've seen it many times where they can be in the red, but by the time that the market opens, they're in the green. There's times that the markets are in the green by right now, but by the time the market opens, the market's in the red, right? So as right now, it really doesn't matter. You can pay attention to NASDAQ futures, but this is why we wake up during that pre-market session to try to see if we can see a clear direction before the market opens, right? So let's go ahead and start breaking it down. I'm going to go back. So if you want me to break down your stock, just make sure you like, subscribe, and comment in the live chat. And again, only if you're subscribed, it will allow you to comment in the live chat. So let me go ahead and break these down for you. I'm trying to see the people that, all right, there we go. We got Gary. Ricky, could you please break down CCL? Would be more than happy to break that one down for you, Gary. So let's go ahead and break that bad boy down. So this is Carnival Cruise Line. We've kind of been trading sideways for the past couple of weeks, right? We could see that common resistance level and common support level. There's not been higher highs. So again, I like to ask myself a very simple question. Am I missing out by not being invested? Not really, right? And if you look at it on the day chart, we're still trading below the moving average, and we've been trading below the moving average ever since literally 1 year ago. We've been making lower highs and lower lows and not able to break above that. So a very simple thing, we can set an alert for the break below, and we can set an alert for the break above. With this, you don't have to predict or try to hope for CCL to go up. You can literally just wait for it. And if it actually begins to indicate signs of an uptrend, then you can strike, right? I just would hate for anyone to enter a position when direction is not clear, right? It's not clear that it's going up. It's not clear that it's going down based off of recent patterns. It's kind of just trading sideways. And at least for me, any open position and understanding that any open position is a position that is open to risk, right? So this is where I feel like discipline comes into place. It is very easy to buy this stock. It is very easy to open up a position because it's so accessible. And this is where that failure rate really accelerates, right? When things are so accessible, when things are so easy to do, when it's so easy to not have discipline, when it's so easy to not have criteria, that is where you get into those bad habits, right? And what are we here to do? We're here to implement good habits. It's not that you're going to be perfect, because you will never be perfect. I will never be perfect. No one will ever be perfect. You're never going to be right 100% of the time. You just want to be calculated in the way that you choose to take advantage of an opportunity. And if you can see for the past couple of months, we've been trading sideways, then what does that tell you? Well, direction as of right now is not in your favor. You're not missing out by not being invested. So I would rather set an alert. And if opportunity does present itself, then cool. I can follow up tomorrow, or I can follow up when it does begin to indicate signs of an uptrend and, invest then, right? So let me go ahead and break down. Let's do SPY. Thank you, Esteban, for tuning on in. Hopefully we earn your thumbs up on this video. If we look at this on the day chart, so I don't know if you guys have been paying attention enough, but for the overall markets, this is the third rally that we've seen this year so far. I know some of you guys might not even call it a rally, but let's just take it as what it is, right? So this was in the beginning of this year. We peaked, right? We sold off, and then we rallied. And then guess what happened? Russia attacked Ukraine, right? We sold back off again. Inflation started to happen. We rallied anyways, right? And then we got rejected. And then there's been this recent rally, right? From overall lows of 350 all the way to highs of 408. So now when I was talking about, hey, we're at this specific level where things can begin to look really good, right? So if inflation has actually peaked, if the Federal Reserve is less aggressive, the market could rally a little bit more. You know what I would hate to happen? that we all buy aggressively here, and then the market just gets rejected and it continues this descending lower high and lower low. I'm playing devil's advocate here, right? I'm just making you aware of not just the best case scenario, but also the worst case scenario. And I think this is how you can be more open to the idea that you don't have to be right every single time, right? As of right now, we're trading above the moving average. That is a great sign. We're trading above the EMA. That is a great sign. Inflation seems to be going down. That is a great sign fundamentally. So now on December 13th, right, we talked about it, based off of this CPI data report, December 13th, there will be an inflation report, and that will depict if what is reported, if inflation is still going down. And if it is still going down and it's better than expected, then guess what? The market will most likely rise. But if inflation comes in hotter than expected, then guess what? The market will most likely drop. So this is where you're kind of in a pickle, right? You're at a critical point where you're overbought based off of recent patterns. Look at that RSI, look at that MACD. We're overbought based off of recent patterns. We've been making this descending lower high and lower low, but we're also at a point fundamentally that inflation, which has been the critical point of, it's been dragging down the market, that it could be going away. Not totally, right? But as of these reports, I'm not saying that inflation is no longer here, but as of these reports, it's necessarily getting better. So with that being said, we're at a point where if this report comes in better than expected, I feel like that will give us a better understanding if it's actually time to begin to average up into our positions instead of being hopeful that the market actually recovers, but then the market actually just grows another leg down, right? That would be the worst case scenario. So again, don't just think about best case scenario, think about worst case scenario. Not because you're trying to be a negative Nancy, but because you're aware, right? You're not going to be a hopeful investor. You're not going to be someone that's blinded by only one side of an opportunity. You always have to take downside risk into consideration. Don't do it for me. Don't do it for anyone else. Do it for your future self. That's always what's most important, right? That you're not selling yourself the idea that it has to play out according to your plan, because there's always a second side to an opportunity. So I just want to make sure that you guys are aware of that, right? Always talk about negative Nelly. I guess not negative Nancy. I'm going to go with that one, Joe. Negative Nancy. Negative Nelly. I like that one. All right, let's go ahead and break down the next one. So if you want me to break down your stock, just make sure you drop a thumbs up and subscribe to the channel, and you should be able to comment in the live chat. Let's see. All right, SRPT. So it's a therapeutics company. This is just my opinion. I am not a big fan of therapeutic companies. I have seen them time after time. And again, this is just my opinion. I have seen time after time that they are extremely volatile. They're lucrative for a short period of time, and then they just completely crash once again. I don't deal well with these. I never have, and I just choose to stay away from them, right? Just like anything, you know what to stay away from. And this is my kind of bad experience with them, where I've traded enough therapeutics company when I was first getting started that I just find them to be too risky. If this is your edge, then all power to you. As long as direction is in your favor, I would treat it as a pump and dump. I would ride with it if momentum and direction are in your favor, but I would never hold some of this overnight, right? It's just too risky for me. So I want to be open with you on why I wouldn't do it. But if you want to do it, I'm a big believer that there's a lot of money to be made in a lot of different ways. I just consider this to be too risky for my taste. And that's just me. All right, let's go ahead and break down the next one. So all right, let's see it. Oof. You guys are hitting it. All right. Wow. Break down SNOW. Okay, AMGN. AMGN. Let's go ahead and break that one down very quickly. I appreciate you taking time and at least posting it in the ticker call out format. Of course, John, thank you again for tuning on in. So I view this to be very overbought. So I always take risk to reward ratios into consideration. If you're not part of my Learn Plan Profit Group, then this might not make sense to you. But anytime that I take advantage of an opportunity, I want to make sure that my upside outweighs my downside risk. It's very easy, right? If I play you let's play a coin flip, right? If it's a 50-50 chance, you might not be as willing to risk something, right? Because it's a 1-for-1. But if we play rock, paper, scissors, and you can only choose, if you can choose rock and paper, and I can only choose scissors, then again, you have a better chance of actually doing well. That's actually a horrible analogy, and I really do apologize for that. But you get what I mean, right? You always want to make sure that your upside potential outweighs your downside risk. I tried to make that analogy make sense, but I try to make it into more simple terms, but that even confused me. But the very simple way of how we can view this is that, we could continue to rally. And if direction is in your favor, then sure, you can take it day by day. But the more overbought that it becomes, the more risk we have for downside, right? Because every single time that this thing rallies, it eventually pulls on back. So because of that, I would be very, very careful with buying at these overbought levels. It's kind of like buying at the very end of 2021, right? It's when the market was very overbought. And yes, markets always do end up recovering, but this thing has a lot of downside potential versus maybe the very little upside. And there's been a lot of signs of consolidation up here. So because of that, I just wouldn't be convinced at the idea that the upside outweighs that downside risk. And because of that, I would have to say that, it's not something that I would consider as a good long-term play. So SNOW has been struggling based off of recent patterns. So check NASDAQ. I did see that it was dropping, right? Yeah, it dropped a little bit. So NASDAQ future, NASDAQ futures down 0.18. Yeah, so it's testing that support range, and then we have that resistance range right around 12,000. So we talked about that right when we started the live stream. I like to really focus on direction. I also really like to focus on the overall consistency of a company, right? Something like Apple has been showing signs of growth long term. So if markets do begin to recover, I have more confidence that will eventually recover. We've been really struggling with SNOW, right? Ever since the end of 2021 to the very start of 2022, this thing has been selling off, and we're pretty much at nearly 52-week lows. We're at 149 per share. We're still trading below the moving average. In my opinion, there's no reason on why I would aggressively invest into something like this, right? I'm really big on position size, right? So if you see that this is nearly at the bottom and you want to take the risk, right? With the idea that the cheap can always get cheaper, but as long as you can tolerate the time that it will take for something to recover and you view it as a long-term investment, then I would just really watch your position size, right? If you intend to invest $10,000, I wouldn't invest more than $1,000 right now, right? That's a 10% position. Direction's not in your favor. It's been aggressively making lower highs, lower lows, and because of that, there's nothing wrong with taking advantage of an opportunity as long as you moderate your risk, right? And a way to be able to moderate your risk is by managing your position size. We talk about that all the time. That's probably one of the biggest mistakes that a lot of beginner traders make, is that when they're just getting started, they try to buy with every penny in their trading account, right? How many shares of this can I buy? I have $1,000. I want to buy $999 worth of it, right? At the end of the day, if you don't know how to manage your position size and knowing that if direction is not in your favor, you should never buy 100% of something, right? Because at that point, if it continues to sell off, you're literally sitting on your hands, right? You have no more money to buy with. And at that point, you're just hoping for the stock to recover. And you never want to put yourself in a position when you have to depend on hope, right? That's going to be a quick lesson you'll learn. So let's go ahead and move on to the next one. So we got Dominic asking me to break down USO, United States Oil Fund, right? United States Oil, my apologies. Appreciate your time and hopefully I earn your thumbs up, homeboy. So USO showing a lot of signs of consolidation. It was very, very bullish. I like this. It's a little bit more on the oversold side based off of recent patterns. It looks like, what is that, June, July, it peaked. It's been pulling on back. That makes sense. We're not really getting indication of a recovery just yet, but I can see why you're paying attention to it. If we use this little trend line tool, we can see that it does have decent upside, 32%. And there's a lot of talk of people thinking that oil prices will continue to go up until next year. So if that's the case, then this should begin to indicate signs of recovery, and then I would strike. I just would hate the idea of buying heavy now and then it just continues to sell off, especially after the crazy couple of years that it's recently had, right? So again, don't put yourself in a position in which you cannot tolerate. There's no reason that you have to force an entry if you can simply set alerts, stay calculated, and wait for confirmation, right? So I can definitely see why you're paying attention to this. It 100% makes sense. I already have this in my watch list. I've been paying attention to it. We just have not been able to actually make higher highs above that $78 price point. So I'd be more than happy to follow up, but as of right now, direction is not in our favor, and any position that is taken, that is opened before confirmation, is a position that is open to risk, right? So let's go ahead and understand that. Let's go ahead and see, what do we have next? All right, we got Andre with the Tesla request. So Andre, hopefully I earn your thumbs up on this video. Now, I'm a big Elon fan. And even though I'm a big Elon fan, I would never compare Tesla to something like Amazon, to something like Google, to something like Apple or Microsoft. Those companies are proven, right? Those companies are as close to monopolies in the real world. Tesla is close, but Tesla is a little bit more of a wild card because of Elon. And we all know that, right? And there's great potential with that, but there's also great risk. And this is where I kind of get in that pickle where I'm invested in Tesla and I believe in Elon. If anything were to happen to Elon, then that's the end of Tesla, right? I mean, it just wouldn't be what it is today. With that being said, I think Tesla is very oversold. I know that this investment is not for everyone. I know that it offers huge upside potential, 113%. So the way that I view Tesla, you might be asking me the question of like, well, Ricky, what does that mean, right? Tesla is cheap, but what are you saying? Is it not worth it? If I had $10,000 to invest, right, only $10,000, I would be like, okay, most of my money would go into Amazon. Most of my money might go into SPY or QQQ. It might go some into Microsoft, but maybe 10% I'll put into Tesla. A great way to manage risk is to manage your position size. And the more that you respect risk, the better you can tolerate it, right? So there's nothing wrong with taking advantage of a risky trade or a riskier investment, as long as you respect it by moderating your position size. That's the way that I view it. I love Tesla. I love what it stands for. I just wanted to give you guys an example of what I mean of not being afraid to invest in something that can be considered more risky, but just doing it in a more calculated way. Make sense? But yeah, I appreciate you asking me to break down the big TSLA. Just got off the phone with Elon. He said, oh my gosh. You guys are ridiculous. You guys had a good weekend? Everything was good this weekend? All right. Who's pumped for this up and coming week, right? We got NASDAQ market now down 0.2%. It's going to be a fun week. Can you break down FDX? Of course. So that is FedEx, right? It's not FTX. It's FDX, right? Trigger warning. Here we go. We got FedEx down quite a bit, been making lower highs and lower lows for quite some time. We could see that it previously was coming from highs of 312, and right now it's pretty much at half the price. A little bit less than half the price. We're trading below the moving average. We're making lower highs, lower lows. I say don't overcomplicate your investment, right? From here at 180 to here, right where the moving average is at, it's, $20 a share. It's around 10%. I just would say if you are someone that is really new to investing or new to swing trading, and you're someone that wants to be calculated and conservative, I would wait for confirmation. I would wait for the break above the moving average, and I would wait for higher highs. Allow direction to be in your favor. Don't be afraid to be selective. And yes, that means that you're going to say no a lot of times, but that's good, right? Because then you just won't open yourself to an intolerable kind of risk. And that's all you ever want. Put yourself in a position in which you can manage and tolerate. So I see why you're paying attention to FedEx. It was very, very bullish prior. It's just not right now, right? And to not overcomplicate it, just allow direction to be in your favor, and then you can follow up with it. Or if you just have that itch to invest in it, watch your position size. The more that you respect your position size, the better position you will be able to really tolerate, even at worst case scenario. There's a lot of upside potential. I agree with that. Yeah. And that's why I'm saying if you're going to do something, then do it in a calculated way. Just don't put yourself, I just would hate for you to put yourself in a really tough position and hope for this thing to recover and you go all in and then it just sells off. And you're like, Ricky, well, what happened? I'm just like, okay, well, direction was never in your favor. So why'd you go all in, right? It's kind of common sense on how it breaks down. Can you break down Lucid? LCID. Let's do Lucid Group. So Lucid is getting cheaper and cheaper as time goes on. Here we go. We previously hit highs of $64 a share. Now it's trading at $9.55. This is kind of like a Hail Mary type of investment. The cheap can get cheaper, and this is a great example for this. I'd be very careful if you had any intention of investing in something like Lucid anytime soon. I'd look into it a little bit more. There's just a lot of EV companies coming out of the woodworks. I'm not saying Lucid is just one of them. I'm just saying that their stock performance is not the best, and it's obviously shown, right? It's lost, nearly 90% of its valuation. And I think it's safe to say that there's nothing wrong with doing your due diligence in something that has consistently lost money. And a very simple question that I always like to ask myself is, am I missing out by not being invested? No, you're actually saving money by not being invested. So in that case, I would say that no, it doesn't meet my criteria. It doesn't mean that it can't later down the road, right? If direction actually ends up being in your favor, there's so much upside. So why be, trying to nickel and dime an opportunity? Set your alerts, follow up with it, and when direction and if direction ends up presenting itself, then you can follow up with it, right? All right. How many more are we going to break down? So we did 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's do 2 more. How about that? Lucky number 11. Again, if you want me to break down your stock, all you literally have to do is drop a thumbs up and subscribe to the channel, and then you can participate in that little live chat. Ricky, can you break down cost? Yeah, Costco was doing pretty good, right? Costco was doing pretty good. It recently dumped. And yeah, it looks like some form of a dip buy opportunity. It's still selling off, so let it sell off. The cheap can get cheaper, and the more that it sells off, the better price you can get it for, right? If you actually think about it that way, hopefully that can encourage you to not try to force an entry, but actually wait for confirmation, because the more that it sells off, literally, the better price you will get it for, right? Costco, where you keep the cost low. That's their motto, right? So resistance level, more of a conservative resistance, is right around that 558. I wouldn't really go into Costco for swing trading. At least I wouldn't. This would look more like a long-term play. It's a very healthy company. It's a very healthy stock. So anytime that it pulls on back, I can see why you can justify adding a little bit more to it, as it tends to do a very good job recovering. So right now, at least for the past 3-4 months, it's been trading sideways with a very kind of like just overall horizontal pattern. So that kind of freaks me out in the sense that it's no longer uptrending, and it's kind of beginning to trade sideways almost this better half of the year, where it has that same resistance level, same support range. And that usually happens right before there's a change of direction. So I would just be very careful, right? Be selective with your entry. Wait for that confirmation. I mean, we literally talk about this in the LPP course, right? The 3 stages of a reversal: rejection, consolidation, and then confirmation. It's the same thing. It's literally a textbook setup. So wait for that confirmation. Wait for that reversal setup, and watch that position size. Let's go ahead and do one more breakdown. So one more breakdown. What is it going to be? Ricky, can you break down AMD? Let's go ahead and break this down. Let's see if it's a good one. AMD on the day chart, been making lower highs, lower lows, no indication of an overall reversal. I agree. AMD is looking very, very attractive at $74 a share. But guess what? It's been getting rejected more than I did on prom night. And because of that, I know what that rejection feels like. I just wouldn't be sold on the idea that it's going to recover. You could see every single time that it tries to rally, it consolidates, shows signs of a resistance, and then gets rejected. It tries to push up, it consolidates, and then gets rejected, right? It's trading below the moving average. I'm totally joking. I didn't get rejected prom night, right? No, never. I would never. Not me. Not me. I just want to make sure that you guys understand, right? It's getting rejected. Lower highs, lower lows. It doesn't matter how much you want it to go up. It doesn't matter how much I want it to go up, right? It's getting rejected. And it's literally forming the textbook setup that we talk about in LPP of the lower highs and lower lows. Allow direction and opportunity to be in your favor. Don't force it to happen, right? If she don't want to dance with you, don't start dancing with her. And this is the same thing. She's not ready to dance. She's getting rejected. You're getting rejected, right? This is where you have to be very, very patient, because if you try to predict the bottom of something and force something to happen, then you can get in trouble, right? And that's exactly the opposite of what we want to do. We've talked about it so many times before. What is the goal for beginners? Whoa, what the heck is this? Wanted to show you guys our new site. There we go. Again, our goal for 2023 is to stop guessing and to start learning. Market downside is huge, right? Markets are down so much. Instead of trying to guesstimate of where things are going, stay calculated. Be effective. This isn't where you have to jump into everything. You should want to be selective. Not for me, not for someone else. Do it for yourself, for your future self. I don't care with how little money you trade with. It is not about the money. It is about the proof of concept, because you know that if this time, even if you buy one share, but you do it in a calculated way, you buy now, you add more to it when direction is in your favor, you add more as it makes higher highs, and then you lock in profits when we return back to previous highs. Think about it, right? Something like Amazon. We talked about it a little bit earlier with Costco and those 3 stages of reversal. Think about Amazon. I'm not talking about no pump and dump. I'm talking about one of the most valuable companies that's publicly traded. 101% ROI is what Amazon offers based off of current price levels and previous all-time highs. The question is never if the market will recover. The question is just when. And can you tolerate the time that it will take when the market recovers? That's the question to ask yourself. Stop putting yourself in heavy positions that you cannot tolerate. You're not proving yourself, you're not doing any good by putting yourself in those positions. Stay light. Who cares that you're only up a couple dollars or a couple $100? It's the proof of concept. If you learn that concept, if you actually begin to build healthy habits, that's going to make the difference a year or years from now. Not an extra couple of bucks because you took a more aggressive position. We all start small, and as we should, embrace it. You step on the gas and trade with big money when you've proven it to yourself that you understand and that you know what you're doing. Remember, stop guessing and start learning. That's our focus for LPP. So again, if you guys have any questions, you guys know how to reach out to me. That's going to be via Discord, and that's that first link in the description. I am using the Webull trading application. It is free for everyone in the US, and that is going to be the 5th link in the description down below. If you want to use my link, you will earn up to 6 free stocks when you deposit $1. If you have any questions about joining our LPP team, right now we are running a $150 off sale. It's our biggest sale. It's a one-time payment, lifetime access. You don't have to join if you are not ready, but if you want to work with me on a closer basis, if you want to watch me trade live every single day and as soon as tomorrow at market open, click the 2nd link in the description down below, join our LPP team, and again, you can watch me trade live as soon as tomorrow. If you have any questions about that, feel free to message me via Instagram, and that's that 3rd link in the description. I will be catching up on Instagram messages by tonight if you have any questions about LPP 2.0. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team. And we're still streaming. All right, take care, guys.